As the COVID-19 pandemic seems to be getting over, economic activity in the country is also getting back on track. As factories resumed production, it revived the demand for electricity. This also increased the demand for coal. All this booming cycle was a good scenario for investors. That's because an increase in electricity demand gave a positive push to the shares of power companies. As second half of March approached, demand just shot up. With increase in temperature, use of AC, cooler, etc. increased. Due to this, electricity demand and consumption are seeing a rising trajectory. In FY22, electricity demand increased by 8%. Power demand has increased 5% from the pre-pandemic level. In July 2021, peak demand reached a record high level of 205 gigawatts. In March 2022, demand revived to 199.3 gigawatts. If we look at power shortage, then on 7 April, there was a power shortage of 6.1 gigawatts. Due to this, there were cases of load shedding in several states. The situation of electricity demand. Due to higher electricity demand, BSE Power Index has jumped 40% since the start of the year. Shares of electricity companies are rising in anticipation that their revenues will increase due to short-term sales. To fulfill the high electricity demand in summers, power distribution companies will have to buy more electricity. This year seems to be a good one for power sector. From the beginning of the year till April 18, Adani Power shares increased by 135%. Adani Green Energy shares were up by 124%. Adani Transmission shares zoomed by 57%, while S&P BSE Power Index witnessed a growth of 40%. Sentiment in power share is also strong owing to the fourth quarter results of FY22, which is expected to be good on the earnings front. Company's revenue can increase 7.5% year-on-year, while PAT can increase by 30.8%. HDFC Securities research analyst Anuj Upadhyay says that profit of power companies can increase 30.8% year-on-year. That's due to higher electricity demand in the fourth quarter of FY22 and good price companies also got per unit.
So what are the challenges? Okay, now we will look at the challenges faced by this sector. Everything is not good here. The sector is facing a shortage of coal in power plants. Research firm Axis Capital says that each year coal stock is generally at peak in April. But this year, after the monsoon season, there can be an acute shortage of coal. During this period of the year, on an average, there is coal stock for 25 days. But right now, there is stock for just 9 days. As per the figures available with the Power Ministry on 13 April, power projects based on imported coal were working at just 26% capacity and have just 37% of the required coal stock. However, state ministries are trying to ensure the availability of electricity. The government is looking to sort out the issues due to which plants are working at lower capacity. This will further put pressure on domestic coal producers. Another big challenge is the steep increase in imported coal price. Price of imported coal was $50 per ton last year, and this year it has increased by 6 times to reach $288 per ton. Due to higher demand for electricity, its average spot price went up to 11 rupees per unit. Power sector regulator Central Electricity Regulatory Commission has decided that electricity prices cannot go above 12 rupees per unit in the spot market. But Section 11 of the Electricity Act allows the government a privilege that in special circumstances it can allow electricity companies to charge more than the cap. This is done so that companies can compensate for higher fuel input costs and they don't have to bear the loss.
This section is already imposed in states like Gujarat, Tamil Nadu, Haryana and Karnataka. Power plants with a capacity of 8 gigawatts are allowed to compensate for imported coal input costs till November-December 2022. This will help Tata Power, Adani Power, NTPC and other power producing companies in the next quarter. Money9 suggests, if you want to take advantage of a rise in power share prices, then you need to consider the risk-reward ratio. Such shares witness the cycle of boom and bust. Hence, they are cyclical in nature. So before any kind of investment, it's better to discuss with your financial advisor.